The market rallied strongly this week as traders look forward to economic recovery in the third quarter. Hello and welcome back to the Wall Street Petting Zoo. This is our This Week at the Zoo segment in which we reflect on the week's market news and look ahead to the coming week. I'm Christopher Smith.
And I'm Robert Coburn. And the week started off with tech stocks and airliner stocks sharply down. Airline stocks were down mostly due to Warren Buffett's comments on Saturday, where he stated that Berkshire Hathaway had sold off all of its holdings on airlines, which was estimated to be about $4 billion. Treasury Secretary Stephen Mnuchin piled on Monday when he commented that it's too soon to say whether international travel will resume this year. I think most of us expected international travel to resume this summer, so the suggestion that it might not happen this year is a huge blow.
Yeah, and also I saw a couple other things this week. Norwegian Airlines announced that its passenger traffic had dropped off by 99% this quarter, which is huge. And also, United Airlines tried to do a round of fundraising and could not find people to buy its corporate bonds. So, overall, the news for airlines is pretty freaking negative right now. Not looking good out there. Even as airline stocks fell, however, oil prices surged on Monday and Tuesday, continuing the rally from last week. And we ended the week above $26 per barrel, which is a lot higher than I thought oil would get anytime soon. The big rally in oil prices comes as a result basically of three developments. First, demand has returned surprisingly fast, especially for gasoline. I mean, we're still down a little bit for the year on gasoline demand, but not nearly as much as I would have expected. Second, the storage problem is not quite as bad as it was advertised to be a month or two ago. I've seen some analyses that there's actually over 1 billion barrels worth of storage capacity left right now, and we probably won't actually hit that limit. Especially, China has been adding some storage. The U.S. has been opening up the strategic petroleum reserves. So there's more storage than we thought. And third, the production cuts have been pretty big, on the order of about 17 million barrels per day globally. And it's still possible that we could have another sell off later this month, but the price is definitely stabilizing. In fact, some of those production cuts will be permanent because a lot of shale oil companies are going out of business. I saw another shale bankruptcy this week. I also saw that Shell sold off a bunch of its shale oil fields to the tune of $500 million this week. So lots of reasons to think that supply is going to be reduced moving forward and that demand will be increased. And the oil move was confirmed on Wednesday when U.S. crude oil inventories came in better than expected. And again on Thursday when China issued trade data showing that it's importing over 10 million barrels per day in the last 4 months, which is actually higher than this time last year. So demand in China seems to be surprisingly strong. And despite the big rally in oil prices, though, oil producer stocks had a pretty mixed week this week because congressional Democrats are working on a bill to block bailouts of oil companies. So mixed week for producers, but definitely a strong week for oil prices.
And Wednesday, the S&P 500 fell, but the yield on Treasury bonds rose, which is a pretty important indicator of optimism returning to the market. Video game stocks climbed Wednesday as Activision Blizzard, my old friend, reported much higher than expected quarterly earnings, which is as I expected during this pandemic. Everyone is either watching Netflix or playing video games. Another big winner on Thursday was the electronic payment company PayPal, which slightly missed analysts' expectations for the first quarter, but issued very strong second quarter guidance.
Yeah, and Square got kind of a sympathy rally from the strong PayPal results, too. Thursday, the jobless claims number came in roughly in line with analyst expectations, just above 3 million jobs lost. I did see that at its low point, we had about 75% of the population unemployed, and that has rallied to about 50%. So even though we're losing a lot more jobs every week, we have actually replaced some of those jobs already. The big news that moved markets on Thursday was that China and the U.S. signaled they will soon resume trade talks. Kind of a deja vu moment. Headlines talking about the market rallying on phase one trade talks. Headlines straight out of last year. I'm not sure why they said phase one trade talks. I saw something else that said phase four trade talks. I don't know. I'm not sure what the hell is going on with trade talks, but it kind of seemed like maybe the Trump administration is just jawboning in order to support the markets a little bit. And I don't know how much substance there actually is to all the trade talk. But anyway, that's one piece of news that moved the markets on Thursday. And another was that the pharmaceutical company Moderna got FDA approval for its COVID-19 vaccine candidate to enter phase 2 clinical trials, which I think created some optimism around the idea that maybe we'll have a solution to COVID-19, within a year or two.
And Friday, the S&P 500 got a huge rally after the unemployment number for April came in better than expected, although it still looks pretty bad with unemployment at 14.7%. Some analysts are also suggested that the actual number is about 5% higher than that if you include people who are furloughed. About 75% of the layoffs are currently classified as temporary, so a lot of these jobs will come roaring back when the economy reopens. But the longer the lockdown drags on, the more layoffs are getting reclassified from temporary to permanent. And even if we reopen the economy today, it would still be a couple years before employment fully recovered.
Yeah, and a quick note on stock valuations in the market right now. There's this polling firm called FactSet that surveys analysts about their expectations for corporate earning results and then compiles all those data together to come with a broad picture of earnings in the entire market. If you're an investing maven, you really have to follow FactSet. It's got newsletters that it sends to your email, and it also has a Twitter account. But anyway, last weekend, FactSet released data showing that the S&P 500 is now trading above 20 forward PE for the first time since 2002, which means that stocks are at their most expensive valuation per dollar of earnings that they have been at in 20 years. Essentially, traders are pricing stocks right now as though we are in the biggest bull market in 20 years. And in a sense, maybe we are. So stock valuations tend to lead the market by about a quarter. Right now, we're in the second quarter, so this is reflecting third quarter valuations. The second quarter GDP is expected to contract by about 40%, anywhere from like 30 to 40%. But in the third quarter, analysts are forecasting a 20% recovery in GDP. So GDP will grow 20% in the third quarter. And that would indeed be the fastest GDP growth in 20 years by a wide margin. So that's admittedly 20% on a much reduced baseline. But so it's not going to get us anywhere back near where we started, but it's still a pretty big rally off the economic low. And I think that the market is pricing in that optimism about the third quarter. So there is a sense in which we are in the biggest bull market in 20 years, even though that's kind of ridiculous to say, given how far the market has fallen and the fact that it's not going to recover to anything like pre-COVID-19 levels, within the near future.
Yeah, I think there's also the factor that a lot of money that you would normally be in bonds has been moved to stocks right now because bond yields are so low. So that's probably a factor too. Stocks are kind of the only game in town right now.
Yeah, that's right. So let's talk stocks that we watched last week, Robert. What were you watching last week?
All right, so this last week, I was watching CVS. They reported earnings Wednesday morning, beating expectations, and reported that virtual visits through Minute Clinic, it's their urgent care service, was up 600% compared with the same quarter in 2019. And
Wow.
home delivery of prescriptions surged by 1,000%. Which, I mean, makes sense because, I mean, a lot of people aren't going to go out to get their prescriptions. They're probably going to get it shipped. And use of the company's app increased by double digits. And CVS had a fourfold increase in the number of customers adding front of the store items, such as toilet paper, soap, and prescription home deliveries. And use of CVS-owned health insurance company Aetna spiked too. More households used the Aetna Health app in the first quarter than the first 3 quarters of 2019 combined. Also, on top of CVS, I was also watching AutoNation this week, but it looks like they came out early this week and stated that their quarterly earnings will come out on this coming Monday before the market opens. And as I stated last week, the auto market is hurting big time with many lots overfilled with unsold cars, so expect missing expectations being announced here and probably lower guidance. What stocks were you watching this week, Chris?
Yeah, so I was watching Beyond Meat, and that proved to be a very profitable trade. Unfortunately, I didn't actually buy it. I was just watching it to see what would happen, but I wish I had bought it because, boy, it rallied almost 50% this week. Um, Last weekend, there were shortages of meat products, as we discussed, because meat processing plants have been shut down, and the ones that are open have been experiencing labor shortages. And this week, Wendy's announced that a fifth of its locations were out of beef, so Wendy's, sold off, and Beyond Meat soared because it offers a plant-based meat alternative. However, early this week, Trump issued an executive order demanding that meat processing plants reopen, and that seems to have stabilized the meat market by Friday. Live cattle prices have been really low because they couldn't find processing plants to sell their cattle to. And on Friday, the live cattle prices shot back up, which suggests that those meat processing plants are back open and close to full capacity. So I expect that the meat market will stabilize somewhat and that Beyond Meat will sell off next week and maybe some of those burger joints will rally a little bit. We might see a rally in Wendy's. Let's talk stocks that we're watching this week, Robert. What are you watching this week?
Bitcoin. Bitcoin has been making a lot of noise this week, with it peaking above the 10,000 mark, something it hasn't done since mid-February. With also the halving is happening, expecting to occur on Monday evening. So we're almost 48 hours away from the halving. It's supposed to be one of the last ones, and expect to hear more and more chatter around Bitcoin this week, next week. It's going to be Bitcoin heavy news for probably the next month or so. I feel like this may be the last time Bitcoin skyrockets in price, though. And now some would also correlate Bitcoin with other past investing crazes. If you've read A Random Walk Down Wall Street in the second chapter, written by Burton McKeel, Burton talks about how the past often repeats itself and investors never really learn from past events. They cite the tulip bulb mania of the 1600s, the South Sea Company of the 1700s, and the Florida real estate craze of the early 1900s. Now, will Bitcoin follow suit? There's still a lot of debate, and only time will tell. I like to err on the side of caution, though, and at least have some money in Bitcoin just in case it does skyrocket. However, this is money I deem as gambling money and don't expect to see again, which is different from how I perceive normal investments.
Yeah, yeah. There's an old axiom on Wall Street to buy the hype and sell the news. And so I would not be surprised to see Bitcoin skyrocket during the day on Monday in expectation of the halvening and then sell off really, really sharply immediately after the halvening happens because of course there isn't going to be another halvening after this. So you won't have the kind of upside catalyst in the future that you have had in the past. So I wouldn't be surprised if this is the end of the Bitcoin craze. If Monday is literally like the last day that you can really make money in Bitcoin. So I personally, if I were playing Bitcoin, I'm not going to tell anybody else what to do. But if I were playing it, I would sell off before the halvening actually occurs Monday evening. Um, I am mostly cash right now. I'm not really watching anything too much. I mean, I'm looking forward to some earnings coming up. We've got Baidu and Alibaba earnings coming in the next couple weeks. And I'm also watching HP and Cisco, which are coming out to their earnings dates. I think that those are all like pretty reasonably valued companies right now. And so, depending how their results are looking in quarantine, I may pick up some more of those. So I've got a little bit in those stocks right now. But I am mostly cash because the swap markets are forecasting about 3% deflation this year. So cash is a pretty safe place to have your money. Basically, you're going to earn like a 3% return on your money just from deflation, just from having cash. So I think that's a relatively safe place to have it right now. And of course, debt is bad right now because deflation means that your debt increases in value. So if you've got debt, it's a good time to pay down some of your debt. Um, I'm also watching the 200-day moving average in the S&P 500, which we are approaching. We're within just a few points of that level. And about a week ago, we got rejected pretty sharply from that level. We're approaching it again, so it'd be interesting to see Monday whether we surge past that level or whether we get rejected from it again and head back downward. So I'm going to kind of calibrate my strategy for the week once I see what happens when we hit that level. My sense of the market right now is that it's feeling pretty optimistic, and I think we could just surge right past that level in the S&P 500, but we'll see what happens. All right. If you guys heard anything that was useful to you on this podcast, please give us a like, share, or comment on YouTube. Follow us on Twitter. I post news updates on Twitter throughout the week. You can also like us on Facebook and get those episodes as soon as we post them on the weekends. And please also tell your friends about us. We've also got a referral link to Webull underneath our YouTube video. If you sign up for Webull through our referral link, then you get a couple free stocks. We get a couple free stocks that help support the podcast. We really appreciate all that you guys do to help us promote this podcast because we do this entirely by word of mouth. We don't advertise. So you telling your friends is the only way that we get the word out. And thank you so much for all your support. And we will see you back at the zoo next week.
See ya.